Happy Tuesday. Welcome back to the final hour just after 3 p.m. Eastern Time on Tuesday, April 8th. This is really the summary of what we're looking at for right now. Since Liberation Day, whole global economy's been pretty disrupted, thrown into a massive temper tantrum. This is the true feeling and price action of a trade war. And I think for the betterment of the world, it requires the US and China to somehow come to terms with something. Um, I know that seems adversarial. I know there are this kind of optics of we need to be enemies, but really we're frenemies. They make everything, we buy everything. Um, I get it, but April 9th, April 10th is fast approaching. We have a lot of news to get through this week. We have CPI data and PPI data on Thursday, Friday for the U.S. We have the 8th or the 9th and 10th tariff deadlines between the U.S. and China. And I don't know if there's going to be any change to the deadlines. I don't know if there's going to be any change to the negotiations or lack of. If there's going to be more tit for tat reciprocation, I don't know. But clearly, based on today's price action, what has been a gap to the upside has been faded very quickly to the downside. I do see a pretty strong level here around the 5,000 handle. So just looking at real price action, I do have some trades running into the end of the day. We will see what it looks like. I am hoping that we kind of hang into this 5,000 zone, 49.95 zone. We bounce back into like even 5015. I have some profit traps in here. If this was a nice little way to kind of end the day, I'm hoping that the market doesn't just continue to dump even harder and take back, what was kind of a wild and crazy choppy day, but ultimately the bulls made their way higher. Futures market opened higher, big gaps, but we really faded all day. So market up, down, pause briefly intraday, and then down to fresh lows. So perhaps we settle in around this 5,000 handle. Let's find. Yep, that's a good point, Jonathan. And who will blink first? Yeah, I mean, I don't know, and it, it it just seems like it's a lot. It just seems like it's very heavy right now in the markets. There's tons of uncertainty. It is going to drag on virtually everything. It does make me nervous that this is a bit systemic. And looking to see where the markets are at today, it's like we were up 3 to 4% on the S&P. Now we're down 1.29%. So I mean, we had a gap higher. Here's the daily time frame. You can just do the numbers. So from the close last night or yesterday into the open, market's up 3.48%. Okay, from the close yesterday to the open today, up 3.48%. So 3.4% to the upside, all the way down to a push lower at 5.83% to the downside. So it looks not as bad as what it is in reality because, I mean, the market's down 1.3%. Right, that was from yesterday's low, which we were higher than that low yesterday. So I mean, all sorts of drama, right? But that is nearly a 6% move in the S&P from high to low today. And looking at the Nasdaq, here's the Nasdaq. We came up here similar price action. So a close yesterday, a gap up and push up to the highs about 4.59%, and then a fade hard from the highs today, down around 5.7%. A lot of intraday swings. These are big percentage movements. Here is the Dow. The Dow not looking much better. So close from yesterday, open to high today, 3.89%. And from the high today all the way down to current price, down about 4.42%. Not a good look. IWM. This one was up, I think, over 5%. 3.43 from yesterday's close, and a move from high to now, about 5.7, 5.8%. So anywhere between like 7-8% swings from going up 2-3% on the day, 4% in the Nasdaq, 4.5%, all the way down 5 to 6%. Big intraday swings. So final 50 minutes, some trades I need to keep a close eye on. I am in a bull put spread that's 15 wide. That's not looking great right now, unless this market can just shoot up aggressively to like 50-40. I'm going to take some heat on this one, but I've got a broke wing butterfly that has a trap around 50-15, which is right now not looking good either. I've got a butterfly, which is up 140 45-cent debits up about $100 right now. I'm up 255% of the butterfly. I'm going to try to let this one potentially cash settle, and this would be a max profit of around $950 if I can get it. But if I don't see a decent pop to the upside of maybe 20, 30 points, then I don't have a profit trap here. I don't have a bull put spread. I don't even have a butterfly. So I mean, I'm kind of curious how the day settles for me. It's probably not going to be super great unless we kind of stabilize and hold this 5,000 handle. What is continuing to go well is my futures options continue to grow. Right now, I'm up about $64,000 in options for my $64,000 in options on my my MES and ES combo. So I am hedged. I'm not sure if anybody just bought puts today. I didn't really think that have to be the play. The market intraday, this is what I was watching. We were right back in between this gap and this gap, and obviously the bears were like, we'll just go ahead and take it back. So we've had a pretty big swing. One prediction Wall Street dude guesses 4,500. Yeah, I mean that's right there. 4,500, 4,250, 4,000. I could see all of them. I mean, like I mean this is no joking matter. I mean, when you talk about these levels, like technically I could see us holding at these levels, but there's nothing good about a 20% correction that isn't immediately met by the Fed. I mean, last time we've seen, let's just think about this. The last time we saw 20% corrections, we saw a 2020 crash in COVID. Market dropped about 30 to 35%, met by great crazy stimulus. Before 2020, it would have been your 2022s. Fed didn't really have to do anything. That was basically the reaction of the markets, raising rates aggressively and the deleveraging that happened at the top of 2021 in the tech space. So Nasdaq, what did you? Hang on a second. What did you do? All right. Sorry, my dog came back like covered in something. I don't know what he did. Crazy, crazy dog. Okay. So 2022 market was deleveraging. 2020 was a COVID event, global pandemic, whole world shuts down, and was met by a ton of stimulus. 2018 was a sell-off with Volmageddon at the end of December after the Fed had raised 4 times and immediately cut in 2019. So for a lot of the 20% corrections, the Fed was kind of right there to step in around those like 20% handles. Right now we're at 20% and the Fed is not stepping in to do anything. That's why I don't think this market necessarily, immediately responds to the lows, and the drama is not done yet. It's just not. So, I mean, take a look at your technicals. Let's just talk percentages. We had a high to low of around 21%. Now that's from all-time highs. I know year to date the market's down about 13, 14% in the S&P. Okay. Come on, dude, be generous. Settle around like 5,000 today. Do something. Don't just keep freaking dropping all day. But we've already had a 21% correction. Could I see 21% high? Oops, let me change this color. Could we go high, low, lower high, lower low? Yes. That potential swing could be a 4,000, like low 4,000s. And that's just using, high to low, some type of equilibrium pullback, and just going like simple technicals, right? High, low, lower, high, lower, low. That puts us in the low 4,000s. If we have another wave lower, this would be the worst case scenario. I think worst case scenario, but mid 3,000s, like 3,500. That would be if the price to earnings ratio is going to settle in around like a 15 times price to earnings. If it's a 15 times price to earnings or a 14 times price to earnings, that puts us in the low threes. I calculated what would be around a 16 times the earnings, and that is 16 times puts us around 4,250 to 4,000. So when we started this year at these highs, the PE ratio of the S&P was around a 25 multiple. It's been now cut to about a 21 or slightly less than that based on where we're currently at. So earnings compression is the next piece to kind of fall if we're going to get from 20 to 19 to 18 to 17. It just depends on how aggressive these are like revised. I mean, if earnings is revised, like pull the, I mean, not even like pull the band-aid off, but it's like sever the arm and we have just this nasty, like huge revision to the downside. You'll see the market again swiftly price things in. So, I mean, it's like technically we need to hold this level. If we have this resistance and we have this support, we technically I can understand us like maybe poking around those lows, but not really breaching. But the more we flirt and threaten and test, um, I mean maybe the market can fake out here and give us a bear trap, but I don't know. It is just it's such a key area that I think my biggest concern is that this is open space. Just like we had open space below 5,500 that quickly got there in 3 days, this open space could also be just a monster schlacking in the market. And what's to stop it? A round number at 4,000, like there's nothing there. So we had a little pullback in 2023. We had the bottom in 2022. I mean, there's an outer trend line all the way out here towards 3,200, and that would be comparing, I want to say like the 2009 lows. If we're going way, way back in time, yeah, I mean, you're taking the great financial crisis low, connected that to the COVID low, and that would be your outer trend line. So, I mean, this is not a good looking sign. If we are in open space, this market can give back a lot. And let's just I'll just say hypothetically, let's put it in there. So let's say from these recent highs, we come all the way back down to settle in around a 50% pullback. 50% pullback is going to take us back to the pre-COVID highs. You are going to wipe away the COVID crash and stimulus bazooka. You're going to wipe away 4 years of gains. I guess 5 years of gains if you count the early all-time highs we had in February. But that's not good. You know, should we start? I mean, I'm already short the market. I mean, the bad part right now is like the VIX is so high that you're already seeing. I mean, look at the VIX on today. The VIX today is not going anywhere. Like I'm telling you, I just we keep seeing all these headlines like most extreme this, craziest move here. Like this could be a like history maker. I mean, even yesterday's decline in volatility, I thought today was going to be a little more encouraging. It's not, right? Volatility is right back up. We faded all the way back down. We've had a 5 to 6% move to the downside again. You know, so I mean, I guess if we're lucky, we play around with this low here. We play around with that low right there. If we're lucky, right? I mean, today I'd love to see the market kind of hang out around 5,000 because I'd like to profit trap that thing. But if I end up losing, I freaking end up taking some losses, and it's just paper cuts, and it's going to be annoying. But I'll just let price do its thing. So anyway, maybe we can bounce off that Monday low, right? But you can just see like what the mood of the market is. It's like this was nothing to get the market excited about. Literally for the first, I don't know, 40 minutes of trading. Congratulations, we made it look like we're going to go bullish on the day and kind of hang out here, maybe hug this little gap area and try to find it. Nope, that was enough. Market said, okay, good try, short. Let me put this back in at 5,000. See if I can get a surge back to 50.15. A couple of profit traps in there if I can get them. Okay. Butterfly is up around 280%. Broken wing still down. Son of a biscuit, man. Come on. 5,000 would be nice. Son of a bee. All right. I need something generous around that 5,000 to 5,510 level for a profit trap. Ideally, a 5,005 would be best of both worlds to get two little profit traps by the end of the day. We'll see. What do you do to your account I've got defense plays. I mean, here's my defense. So part of the defense is, shorting the market, which I'm doing with futures. I did it with the SPY, close out for some profit on the SPY. I hedge the SPY, hedge the Qs. ES is like two things working really well right now that still have room to run. ES is one of my hedges. MES, other hedges right now between 52 and 18. That's 70K in hedge profits right now. So it's helping. It's not foolproof. I don't take all of my deltas and go completely delta neutral, but it is helping me stay somewhat defensive, get some profits to the downside with asymmetry, and then kind of trade my way through these environments. The other way of playing defense is just diversifying. I mean, you can see here I've a lot of symbols. They're not all correlated. They're not all high beta. They come in all shapes and sizes. But BTI is defensive, and that's profitable for right now. CB is a low beta. That's insurance. CEF is gold. That's fine. CENX, I've got some puts. This one's still fine. Chipotle, I mean, these are midsummer moves. I was nowhere close to having any assignment or risk on Chipotle, and now I'm like, well, we got some naked puts that might be assigned. Coinbase, 155. I mean, that's my line in the sand. That was like a 10 delta when I started the trade, and now we're trading at 151. So this expiration is out to next Friday, not this Friday, but next Friday. I'd certainly like to see the cycle get a little bit better. Costco, this is a 111 cost. I mean, this one should be totally fine. I'm up some bucks on Costco. All right. What else? Delta, I put on some crazy low puts on Delta. I essentially did puts at COVID lows when the whole world shut down and nobody's going to be traveling because it's unsafe and you can't do anything outside in public. I shorted some puts on Delta that I would own the stock at like 20 bucks. And, that's fine. But it's that was just because the premium was so high. Dell Computers, this one, I have some ratio spreads. 85. Let me see here. That's a put. I might have this. I mean, it's a wide credit spread out to May. I mean, is Dell going to go up $13? I don't think so. Usually no. Partial ownership of the Dow. Some 111 trades down to the 360 zone. Yeah, 360 zone. Hopefully that is safe over the next 30 to 60 days. Disney, no good there. EWJ, that's a position in the Nikkei that's getting crushed right now. Brazil, it's an emerging market. It's nowhere near a breakout point. The whole thing was reset. I was getting close to that 200 moving average for a buy zone and didn't validate. Ford's down to fresh lows. This is a full cycle trend getting smoked, down 18% on a fund that's supposed to be trading with any market condition. FCX is copper, smoked. Just it's okay, but not great. I'm selling puts on copper. But if the global economy slows down, I mean, does the world get its copper and the U.S. doesn't? Well, it's not going to be good for this supply shortage. FEZ is Germany. That was a easy premium sell, and now I'm being threatened to the downside because Germany just completely did a 180 this last week. FXI, that is China, up a little bit on that one, barely, with just some owned shares at 26 bucks. FXY, this is long the Japanese yen. This is a hedge. So gold, silver, my futures hedges. This is up $2,000. GLD still up about $14,000, even though the market's been pulling back on GLD. I'm still long it. So that's another hedge. Google sold a bunch of premium. I thought that was one of the more better ones this last week. I sold some $100 premium, did a 105 by 100 ratio spread. And again, I think it's okay. It's only out to June. I think it's okay. HIMS did a long-term diagonal out to 2027. Not looking good at all. Crazy. I bought a deep in the money call. IV wasn't crazy high when I did it, but we're clearly seeing a big run on growth again. Bitcoin, I'm still holding some profits on Bitcoin because I've been dollar cost averaging in, but we're obviously seeing some declines in Bitcoin. Russell, trying to sell some premium, but not doing great. JetBlue is an airline that I don't even know how it's still in business at $3.62. They kept losing the merger with Spirit Airlines. I'd love for this thing to squeeze back up towards, $9, 10, $11. It's lower than COVID lows. It's actually an okay airline. I mean, quality wise, I just don't think fundamentally it's as strong as like your Deltas and SkyWest of the world. JD, I'm gonna have to end up rolling my calls down. Cover calls that I've been doing at $40. It's out to May. I'm just gonna keep rolling and working and massaging. J&J, fine. Just a big shift in the puts from the 135 levels that I had. JPM, I took a fresh trade on this today for an expiration on Friday. There's an earnings play on JPM. I did that for my Newsbreakers class. Coca-Cola, defensives, doing pretty well, up some profit. Want to keep rolling out, collecting income. LDI, LVS, this is Las Vegas Sands. This is not great. These are all puts sitting at COVID lows. Hopefully the market's not going to shut down. But basically, this is my barometer of like the consumer. If Vegas is still busy and Vegas is still thriving with tourism, that's a good sign for the economy to be resilient. If that shuts down and Vegas becomes a ghost town, that's not a good sign. So there's another kind of consumer-based, indicator to see how well or how willing are people to buy. Lyft. I bought shares of Lyft. I'm taking on some heat right now. I still think Lyft as a service, Uber Lyft isn't really going anywhere. Is affected by tariffs. It shouldn't be. It's just, there's nowhere to hide when the market's going to be going lower. MO price is dropping a little bit. I'm still up 20 grand on this. This is a defensive non-beta play, negative correlation. So this one's good. I still have about 2,000 shares. I'm going to keep rolling my calls on this one to just keep generating income. Microsoft. I mean, by next week, if we're not back above 370, I could take some assignment on Microsoft, and I'm going to chew into a little bit more of my capital, which I don't really want to do. So I would love a little rally here. Micron sold a bunch of premium, 55, 52, 50, and 50. We're trading at 65. I think that's a pretty good discount, but it's like a 5-year low. NCLH, this one is a diagonal spread, still down. Netflix, I don't know how this isn't showing more profit, but just that big push in IV. Plus, I've got a 9-day expiration. This should be like a $75 winner. Nike sold some puts. Might get assigned Nike by the end of the year if we keep smashing lower. Nvidia sold a lot of premium. Still have some shares in collar trades. Oracle, this one kind of sucks. Again, might take some assignment here into May unless we have a rally. We'd have to have a bit of a rip in Oracle. But it's like I don't want to take a bunch of assignment and have to repair a bunch of stuff, although I can. I've got the capital to do it, but I'm not excited about taking like multiple assignments if I don't have to. So I might be willing just to eat some of the losses and then keep some of the high premium, the high flyers for more covered calls, more quick repairs. The one thing, I mean, and it's again, like nobody knows, but I think the market is still waiting for the sign to buy. Right now, we don't have it. And I think that sign to buy is either going to come from Trump's mouth or DC. In some way, shape, or form, there's going to have to be some political action in DC to show that, look, you've got bigwigs in corporate America speaking up. Like it was Jamie Dimon was being vocal this week. What's his name? Bill Ackman's being vocal this week. Ray Dalio is always being vocal, talking about the changing world order and the freaking U.S. losing its #1 status. And Ray Dalio, respect the hell out of the guy for Bridgewater Capital, but certainly a doom and gloom circus that he's running with his tours and his latest book he's selling in September. I'm not saying he's wrong. It's just, man, it just doesn't show any like glass half full. It just seems like the whole world is coming to a screeching halt, and that's not fun, And it's not like he's not trading this way, but it's just the big picture, I guess. More of the visionary tale. Hedged, the thing with gold, Palantir still looking positive, but I mean, what a retreat we've had. I mean, these should all be positive in the next 9 days, but are we going to drop from 77 Palantir down to 45? I would freaking hope not. 49, 48, I would hope not. PSP, that is what? Oh, private equity, getting smoked right now. NASDAQ, getting smoked right now. Equal weighted NASDAQ, getting smoked right now. Energy, rocket, housing market, not doing anything great. Equal weighted S&P, nothing great. Schwab dividend, Schwab growth, and Schwab international, so Euro and Asia. None of those are great. Silver, silver. I've been up like $15,000 to $20,000 in silver, and it's now flat. Like it's back in red. Like this sucks. And gold has been a huge outperformer lately. SMH still has some room, but it's like I was willing to say, hey, by May 16th, I might own SMH at $160. If we're not anywhere in this like momentum and growth and nobody gives a crap about semiconductors right now in the short term, there could be some trouble there. Snap has gone down to fresh lows. SPX, I've got some trades in today that I'm watching. I'll keep a close eye on that before the close today. Hopefully we can, like I said, hang out around that like 5,000 handle. I don't know. So, and the list goes on. AT&T still positive. That's a low beta. That's a good dividend play. Collected a bunch of premium there. Hopefully it works out. Target, retailer that's already been beat up like crazy. I couldn't think it gets much worse, but you never know. TKO, this one's okay for next week. Should be in profit, but I'm still $1.10, $1.15 away from full profit there. TLT bonds. I mean, I'm up $4,700 in bonds, another hedge play, but surprising to see that we're back down to $88. We were at $94 last week on TLT. Didn't we have that? Is that what our high on TLT was? $94 TLT? Yeah, look at this crap. I mean, we're down almost 6%, man. Like, don't tell me that bonds is a great place to be hiding out for safe haven because you're not getting the price action that supports that. So I mean, I'm long TLT, and I like that it has been acting somewhat better as the market's been falling, but this isn't good. you know, I mean, this high to this low, taking out these, it's like unless this thing's playing games with us, but man, it's like I was just thinking right side of the trend line, a little bit of a head and shoulders trade here, unless this is coming back to try to find that right shoulder. But if we come back and revisit these lows, like I'm just getting reset on that whole position. I still like TLT up into the 100s. I think that's my target, but I mean that's a safety play. I guess I mean I would be willing to sacrifice TLT if the broader market goes up, but we're down broader market. We're down dollar. Gold is retracing. Bitcoin's dropping. All the indexes are down, and even bonds are down. This is what 2022 felt like, right? I mean everything was down. There was no safe play in 2022. The market was being deleveraged. Tech was down, momentum down, and indexes were down, and bonds were down. It was a bear market in bonds, and then it rolled over into a bear market in equities. And that was a 9-month trend until it bottomed. Okay. We need to pull back, but that's a volatile. I mean, Trump making the market cheaper. You think that's the plan? I don't think there's a plan. I think the plan is dig your heels in, puff your chest out, and say that you're not going to budge and like literally risk destabilizing the entire global economy. Like this is not some like, oh, they're going to budge and who blinks first. This is chicken with the entire global economy. And if we're not careful, I look, I get it. A 20% correction is what the market needed and everything is on sale. But if we are not careful and this slips into a 30, 35, 40, that damage is irreparable for most investors. Like you're going to see that not a lot of survivors come out of that. Now, obviously, those that do come out of it are going to be amazingly rewarded eventually when we get back to all-time highs, and who knows how long that takes. But, correction at 20% is okay. You get to 30, 35, 40%, this is going down in the history books as one of the ugliest sell-offs literally since 2008 and 2001 or 2000, 2001. And what's silly about this one is a lot of this seems kind of self-inflicted. That's what I don't understand about this is like there's no circuit breaker. I mean, I know the market doesn't stop because we're only down 2% today, but we've had a 6% swing. So anyway, it's just concerning. That's all it is. And we still have all these unknowns. I'd say that the scariest look on today's market to me is that the VIX is just showing no signs of halting. Like this little sign of relief yesterday is being met by another surge in volatility, and you can see it by the sell-off today. I mean, we're down another point wise. I mean, what are we down point wise today? From the high today to the low that we're still pushing lower to 6% from high to low today. Like this relief is not coming easy. So Again, I'm not saying any of this to scare anybody. Like this is just, it's not fun. It's unpleasant. I'm still navigating a drawdown. I didn't turn red until literally Friday last week, and now it's just getting a little bit nastier. So 260. So I've got about a 9% drawdown. A lot of it's unrealized, but still not fun. So my 8-9% unrealized when the market's down 20+%. I don't really take that as like, oh, I'm winning. It's like, no, this sucks. And even today, it's like this was these were 10 delta positions, don't even matter. 5 delta positions, 1 delta position, don't even matter. So, okay. So I'm probably gonna take some losses today. But there's 23 magical minutes left in this market. So if we somehow rally by the end of the day, if we're lucky, part of me is just thinking like, well, maybe that's where we're going for the rest of the day, is right back down to the same low we saw Monday. And this market's no better off other than just a crazy swing from low to high and high to low. And we're no better off in this week is just a giant mess of volatility. Right? So anyway, to help and assist, the nice thing is these are getting better as the market is falling. Like this ES hedge especially has the potential to be like I don't even know. Let me do the math here. Okay. So this one has the potential to be times, let's see how many accounts I have this in. 1, 2, 3, 4, 5. This is like everyone's accounts. I've got all tradable accounts with full permissions except for one. 1, 2, 3, 4, 5, 8, 9, 10, 11, 12, 13. Okay, so times 12. Times 12. So this ES hedge, look at this piece of shit, falling another 50 points. This hedge has the potential to pay over $500,000. So at the end of the day, if like the shit really hits the fan, I can be okay. But my God, man, like this is a 4,000% gain on a hedge that I'm just going to let it go and feel like if I'm at a point that I need to say, hey, I'm going to protect my profit now, I'm going to need it. Like if this drawdown is going to just continue to escalate, I'm going to need that 100K, 200K, 500K. So it's there, but it's not fun. All right. So we've got a few more minutes here. 49.33, like not even close. Didn't even give a crap about 5,000. Just right down to it, a little kiss, and then bye-bye. So yeah, I wouldn't be surprised if we have another pushback down to the lows. This relief rally, it's like, how do you trade that? Comes down to the lows, swings up here from yesterday's noise into today's move. You're up 8%. Fib wise, like this doesn't really offer anything. Like this little pullback here, let me check and see. I'll go to a higher time frame. Look at this. This VIX, we might hit a fresh high in the VIX. Like if we have another surge higher, we hit a fresh high in the VIX. Yikes. Volmageddon 2024, COVID, and we are above all of these big spikes we've had in 2015, 2018. We're talking Great Financial Crisis, which is the highest it's ever been. We had a VIX up to 96. And I talked about this yesterday in I don't know if it was the YouTube session or a roundtable, but when this market was really getting nasty, beaten up during 2008, 2009, we had so many weeks in a row of higher volatility. Go back to 2008 for a second. So it started to show elevated volatility here, right? So there's the 1, 2, 3, 4. So 4 weeks, this thing started to really dump the market over in about a month. But then it got worse. And so you had 4, 5, 6, 7, 8, 9. You had 9 weeks of chaos volatility that just was dropping so fast. Highest VIX we've ever seen on record. And I mean, I'm not going to make this prediction, but like I wouldn't be surprised because everything is moving faster with more leverage, or this case, deleverage. When everyone's running for the same exit, is it possible that we have a higher VIX in 2025? Maybe. You know, I mean, we're not that far away from having like a giant, painful surge. I mean, think about how the price action played out on Thursday last week and Friday last week and Monday this week. That same type of push with the market gapping like another 2, 3, 4% lower. If that happens, you'll get another giant spike in volatility. So here's your current levels. This is a weekly chart. So, I mean, this is one of the most extreme 1 week moves of volatility that we've ever had, but it's not done. So, I mean, this is still climbing. And does it take out this level? I mean, 96 is, well, if we get up there, guess what? Highest volatility we've ever had. Okay. Who can really imagine 2 months ago this is that? Well, I mean, I planned on at least the 10% correction. That was at least my plan. Um, I didn't think that once the 10% was hit, that the market would still have the exaggerated, not it's not even exaggerated, but had the excessive reaction to tariffs. And I understand that they were rolled out with like a pretty bad plan, rolled out with pretty bad numbers, causing a lot of uncertainty in the entire world. That's why I said last week felt systemic. This isn't just like a dip. This isn't a dip. Okay. Um, but when we got to the big technical levels, like we saw in the SPX here, when we kind of built that short term floor at 5,500, um, I kept warning. I know my charts look messy right now, but I just kept warning that this is open space. And in a bear market, open space is a terribly scary thing. Because once we established this bottom right here, this was a trend line, and we bounced off of that. But it didn't last very long. And once we cleared this handle, there was nothing stopping this market. And we went right down to another trend line. And so all we had to, like, it was a pause. We literally stopped, paused yesterday, shook the market out, came up today, came right back down. So it's no bueno, like not even close. So there's 16 minutes left. Um, I don't know. I would be so happy to see this thing somehow rip up like 60 to 80 points before the close. Just because what I thought was a pretty safe magnet to play a butterfly spread is now down. I played that butterfly spread, by the way, in here, and it was a 5,000 price, and we went right to it, and I was up about 280%. I could have taken some profit, but now it's down. I just let it slip through it. I didn't take the profit. So this trade is now basically flat. Like, you got to be freaking kidding me, man. I mean, I don't want to lose on it, so I might as well close it out for something, but this is so stupid. Let me see if I can get can I get $1 credit here? I doubt it, but let's find out. Not even close. 80 can I go 80 cents? 60 cents credit? Nope. Can I get a break even here? I mean, my risk is $45. I should be worried about other management trades, but it's got filled at 60 cents. Okay, so that was a tiny little fucking winner. Sorry, not putting on the language filter today. Just a frustrating trade. I mean, I probably overtraded today, and that's not fun. So I'm going to take some heat on those stupid losses. And those are, and the crappy part is this is the good and the bad of zero DT. Zero DT is so easy to make little income trades, but man, when you get greedy and this market gets directional, you're kind of stupid. So I feel really dumb for just trying to take some nibbles today, thinking like, oh, this will be like, give the market a chance to kind of calm down. It's like, nope, we're not there yet. So I think, and this is just speaking to my daily profit members. It's like when we take the money in the morning, be happy and move the heck on. There's no reason to think that we need to be trading all day because look what price is doing. This was wild yesterday. This is wild today. I don't expect anything to be different for right now. So I'll take it. in form today and survive and trade another day. But it is a frustrating give back to the market in a zero DT environment. So anyway, like I said, probably the best thing I have going right now is 73K in hedges plus gold plus other things. I'm probably up like 100K total, but all that's doing is helping offset this. That's all it is. But the nice thing is these can all grow to much bigger winners. And in this case, it'd be lovely to see that. Okay. So I mean, literally this is crazy. Today I was up $95,000. I started the day out plus 95K, and now it's down to 103. Cool. So yeah, it's one of those days. This does not feel fun. All right. Anyway, it is what it is. Tomorrow's another day. Really frustrating day. And I'm pretty sure in 13 minutes we're not getting some miraculous pop to the upside. I'm almost wondering if this market, just to put the pain on, if it comes right back down to these lows and it just keeps going and taps those lows. What's that tell us? Tells us the bears are totally in control. So Jonathan says, hypothetically, if the market went to zero, would you be rich? I would be rich enough to offset this entire drawdown. I would probably go from a $250,000, $260,000 drawdown into a $500,000 winner that offsets most of that, makes me positive on the year. It would feel a lot like Michael Burry in The Big Short, where he's like down, 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 down. Everyone's yelling at him. He says, I have whatever, like exclusive power. I'm not doing anything. Your money's untouchable. Like pissed off all of his investors, and then he returned them, 400% during The Big Short. So, yeah, I mean, I guess that's the crash case scenario that I have running, and perhaps I need it, but hopefully not. Because look, if that's the case, we have a lot bigger problems than a little hedge that paid out. It's like if this market sheds, if we get to 50%, I mean, again, it's like there's nothing magical about that number. I mean, we are literally talking about trying to rationalize something that is irrational, you know? And I understand that, based on the news right now and based on this cycle, April 17th might be the first sign of relief, because we'll see that there's no solution between US and China. Maybe the market gets a little nastier this week, but next week, if we can finish the cycle on April 17th, and maybe it's like, all right, that's a week into more pain, week into more uncertainty. If we don't stop the bleeding here, and this isn't a Fed to the rescue thing, this is Washington, D.C., stop being idiots and watching this market implode and trying to justify this and say, like, well, this is for Main Street. There won't be a Main Street. If this market implodes, there isn't a Main Street anymore, because you are going to send us into one of the deepest recessions we've seen since 2008. And that was financial Armageddon, So, like, I don't know what this heroic gesture of, like, this is for Main Street, this is for the onshoring of manufacturing. To do what? It's going to take 3 to 5 to 10 years to build the infrastructure to do all this crap. And by that time, what worker is going to step in to take jobs that are unskilled labor for shitty wages? And at the end, it's like every manufacturing company, if you're building for the future, wouldn't you build things that are automated so you can have less labor overhead and have more automation and higher margins? I mean, we're not that far away. So I don't get it. And if we don't stop this, like, insistently negative narrative, or just like how uncertainty is getting priced in right now, there won't be a Main Street left. If the Russell is down 30 to 40%, 50%, like, nobody's going to borrow when you've been crushed, unless it's the same Fed tool again, which is cut interest rates to zero and just try to, liquidity your way out of it. And then it's like, it's just it's the only trick that the Fed has is just monetary policy. And I don't know. I'm less of a believer now, then 2008 was insane, and 2020 was that times 10. And I understand maybe in the near term it was needed, but it wasn't a sustainable solution. And so for this market to be dropping like this without the Fed sitting there ready to catch it, which it's not, the Fed is probably way lower than this as far as like emergency measures. So I just think we're at a critical spot. Okay. Yeah, that's a good point, John. Yeah. I mean, not recession. Yeah, it's going to be depression. There you go. So, and there are some scary parallels. I mean, 1919 to 1929, I was talking to a buddy of mine that's writing a paper for his PhD, and he was talking about this would be Herbert Hoover's administration and wanting to onshore manufacturing, mass deportation, and tariff the world. Led right to the Great Depression. So it's funny how like that's our playbook. And and here's another example. This market is crashing. Last week, everyone was, Scott Bessent and some of the talking heads were like, "Oh, look at the U.S. 10-year yield down below the four handle. Look at it now. It's ripped up 40 basis points. It's going the wrong direction, right? It's going the wrong direction. Look at that. Yeah, that's just illiquid. I don't know. Let me see. If I get lucky today at like a 5,000 to 50-20 handle, I would get very lucky on this trade today. This trade, this trade, this trade. We'll see. I need something to give me a magical spike up to like the 50-10, 50-15 zone. It's about as good as it gets right now. But something tells me if we're lucky, we get back to 5,000. That would have been my butterfly, which I closed out for a small win, but nothing significant. So I'm just taking on a bunch of heat, and it sucks. But the 10-year yield that was being celebrated last week is now doing the exact opposite. This is what I'm saying. Like, this is not good. None of this is good. Correlations are out the window. Calling tops and bottoms out the window. Volatility is excessive, and it's going to be crazier than you think. I mean, honestly, like if you're trying to day trade, you're better off trading direction. I mean, if you've got a bunch of moving averages here, I'll just take this. Let's go SPX. Take this down to a 1 to 5 minute chart. What did the SPX say to do today? Well, according to this, we had a high, came back down to the lows. We broke below that. It's just been a sell all day since 51.70. So, I mean, follow the flow, or I just need to stop over trading. I have so many winners in the morning, and today's just one of those days where I just took a couple extra trades and I'm just taking all losses, and it's stupid. So I'm just frustrated with myself. But obviously curious where the market is going to go. If we hit 5,000, I'm going to be pretty pissed because that would be the last couple of minutes here. That broken wing for 45 cents, probably trading for like $5. Trading for $1.25 right now. It's like this butterfly stuff is always in the final minutes, which is aggravating because we're essentially getting these bid mid asset are really wide, and this has to be like spot on with like 49.95 or 5,000 to make some money. If in situation, would you ever go 100% cash? No. I mean, no, because I mean, there's too many ways to trade options. If I really wanted to go like straight protection, and I talked about this last week in my crash insurance class, if I wanted to go straight protection, then all I would do is go synthetically short on this portfolio to basically wash this entire beta weighted delta. So if I'm, and this, it seems like a lot like, oh, you're 6,000 delta. It's like, well, it's over 13 accounts. Some are more bullish than others, but every sell put is a positive delta, right? Every sell put, every ratio spread, every tilt is a positive delta. So if I really wanted to say I'm going to protect this whole portfolio, it's going to be, honestly, this is going to be about a 10% hedge. Okay. Which usually when I hedge, I like to keep it less than 1% because the asymmetry is pretty solid. So quarter 1%, half 1% usually can pay, 2, 3, 4, 5% in gains. So I just kind of fight and battle through it. But if I wanted to go 10% hedge, set this around a 5,900 negative delta, then that way, if the market goes down, I will stop seeing red in this portfolio. But the same time is if I hedge that much and the market goes higher, I'm sacrificing 10% to watch the market just go the way I want it to go. So I'm trying to kind of, balance it out where it's like I can stomach the annoying drawdown, not like it, be frustrated by it, but know that give myself, 3 months, 6 months, 12 months that I'll be working through it and I'll be fine. Meanwhile, I've got hedges that do pretty well. So anyway, but no, I would not want to be all cash. I mean, cash to me is you have no clue what to do in the markets and all you want to do is safety. Okay, well, if you want cash, then go to a bank that you trust that's not going to go belly up, like a bank that's too big to fail, and put in a 12-month certificate of deposit or money market instrument. And there's your cash, your tie up for 3% a year. Yippee skippy, it's safe, I think. But that's not investing to me. That's safety, that's no risk. I'm not there yet. I want the opportunity for upside gains. I want the opportunity for asymmetry. I've handled a lot of crap over my career. This is just same thing, but with I guess with more assets and bigger balances comes more responsibility, and it's just a numbers game. But it is frustrating to see when I'm just not loving it. Then he says, "Did not have to be like this." Yeah, it didn't have to be like this, but no excuses. It is like this. So what are we going to do about it? I'm still going to figure out how to trade through it. It's just going to be unpleasant. I might drop some swear words here and there if I'm not thrilled. But it is what it is. I mean, and look, at the end of this week, this might be nothing more than a bunch of noise. But I guess my concern with the docket of news we have on tap is that we have the 9th is U.S. deadline for tariffs. The 10th is a deadline for China. And if neither one budge, look, nobody cares about the 50 countries we put tariffs on. Nobody cares. What matters to this global economy is world number 1 and world number 2, which is why this is, I think, the most important takeaway to how this whole thing plays out. Right? Like if there are lines being drawn and there are new alliances being built, it is who are you lining up behind? Are you lining up US or are you lining up China? And I hate to say it that China would really garner that much support, but they could. And man, that would be a very ugly script for the US to essentially, in one policy decision, erode almost 2 decades worth of outperformance over the entire world. Like the US had a good thing going, and man, radically different now because now the other players can catch up a little bit. And anyway, this stupid trade's going to be up, and look at this piece of crap. Now it's trading for $7. So a $20 winner is now trading for $700. The magic of 5,000. Cash settled at 8. That's ridiculous. I've got closing price at 49.85. That should have been, I don't know. If it settles in, it shows mid price at 5.40. I'm curious what it settles. Break even on that butterfly. Ultimate pin would be $900. I mean, I don't know. That's maybe only like a $200 winner if it cash settles. I still whatever, but I took heat elsewhere. I guess one saving note for today is that at least the market didn't just dump to fresh lows. So, but I definitely overtraded today. I didn't do it for clients. I did it for me. That's on me, but I'm okay doing that. It's my account. But it had some winners this morning. Got a little greedy thinking we wouldn't fill the gap today, positioned myself accordingly, and ended up taking some losses. So that's frustrating. But yeah, that's what I'm talking about. So European Union, Canada, Africa, South America. I mean, it is. It's world number 1 versus world number 2. And I don't know if you look. I think this is just something like that happens in life. But if your alliances are jeopardized, then there's no reason to be loyal. Like if we are messing with the economy of the world by putting in this political reform slash tariff reform slash whatever you want to call it, that messes with the solvency and the commerce and the like everything that's been like pretty much a gravy train for like the global economy. Globalization is good. Globalization is deflationary. We just, I mean, we basically took a stick of dynamite and just threw it in the hole, and now it's like starting to detonate. Um, I just wonder if we're throwing more dynamite in there. Are we going to double down? Is this so? That's the thing. Is I don't know, but taking a look at the VIX, there's your daily VIX, all over the place. I mean, we're at such a high level. It can be wild, right? But if price gets worse, we see higher VIXs. Who knows? So I'm just braced. I think that I'm just going to continue to kind of pick my battles, trade small. It was nice to see. It was nice to see some green today. This was like I said, a plus 95, and now it's down 80. So that's a huge P&L swing. I was only down about 60 this morning, and now it's down to 240. So not a great way to feel like the portfolio is being uh, battle tested or improved. Like I'm hedged, but I've been taking some bites on some of these like high premiums and this crazy IV rank. Um, and it's just, I've got to wait some of it out. Some of my expirations are May, some of them are June. Um, but it doesn't make me feel super optimistic, you know. And on the, I mean, I guess, and I'll try to find some silver linings here. The VIX is so high that premium is almost too expensive for protection. I talk about the S&P 50-day moving average and the 50-day moving average on the S&P and the Nasdaq. I mean, to me, this is a very good short-term trigger. This shows that only about 6.95% of all stocks in the S&P are above the 50-day. That is an index that has been completely battered to the downside. Okay, the Nasdaq is even worse. Under 5% of Nasdaq stocks are over the 50-day moving average. The entire market is beat up. Okay, now it doesn't mean that is the automatic bottom, but it does mean that market breadth has now felt the pain point to probably scare everybody away. So I wonder if the retailers that bought the dip on Friday have been shaken out and rattled a little bit. I know that we could make fresh lows in order to do that, but I'm very curious how this rotation, shows some signs of going up. So I mean, this is why I'm angled a little bit long. I've been patient on this when they started to fall. It's like I planned on a 10+% correction. I got it. I've been hedged to the downside. I've taken hedges along the way. I'm just kind of braced also for the the additional like black swan type crash just in case we have it. So this is a market breadth that is finally, I think, settled into a point where historically it's been a very good timing indicator. And if I were to guess, I also wonder, like, I'm sitting here saying like, oh, the 8th and 9th and CPI and inflation, all these things are happening. But this market in 3 or 4 days could have also worked very hard and very quick to price in all of this stuff. Like that is one thing that's amazing about the market is when it dumps like that and we have like that systemic day where everything is down, there's nowhere to hide. The market could have priced in, months and months of uncertainty into like 4 days of just dumps. So because of this, I wouldn't be terribly shocked to see the market find some type of relief, right? But is it at the low? Is it gonna test the low and fake out? I have no idea. And if it keeps getting worse, all I'm gonna do is try not to overtrade and keep watching my hedge levels pile up. Because at least knowing that this at 216% and 154% can grow into the 1,000% or grow into the 2,000%. Like that's how big these hedges are as far as asymmetry. So if I need it, it's there. But it's not going to be fun because I'm still going to take on a lot of heat if I need those hedges to pay me. And at some point, I mean, I obviously want to protect, but I don't think I'm really gonna pull the trigger and exit my hedges until we're probably sitting at like 30 to 40% off the all-time highs. If we're 30 to 40% off all-time highs, then I can stomach the last 10%. And I say that, and then the market drops 50 to 55%, 56%, 57%, 60. I mean, maybe I say I don't dump this thing until we're down 50%. Because fighting back, if we obviously don't go down that far, fighting back is not the problem. It's having this insurance with this type of move, which, by the way, these were cheap. Like, I bought these hedges before IV was over. Like, the VIX was like under 25 when I bought these hedges. So these were very early in the game after we had dump here, 2-week rally. I reloaded those hedges. That's when I did all this. And so volatility was actually quite low on the VIX compared to what it is now. So if we're going down and still going down, these are cheaping out that IV goes. That, like, this is when I bought the IV. Now it's going to be looking like this IV. That's how I get hopefully the big payout if I need it. So anyway, does this make sense? We'll see. So paying close attention. I'm taking a lot more trades in my personal account. So I mean, it's not good either way though. Like this is a unhealthy environment for anybody. Mentally, it's a stretch. It's super stressful. Yeah, Larry, I know. I was gonna say, I mean, I kind of have, like, usually these are pretty magical weeks, meaning, I have the privilege to go to Augusta, and I plan on going this week, and I want to check out some golf, but I'm probably pushing that all back until, like, I'll just scope it out on Saturday. I'll get a travel day in, but I'm gonna be working and grinding and just trying to manage. Um, that's my job and that's my priority. So obviously, the privilege of going to a golf course and watching some, it's like I can do that after hours. But I'm not going to turn a blind eye to, like, what is happening here. I'm not a head in the sand type trader. I'll face this crap head on, and I'll just try to make good risk management decisions. So my waterfall income, I'm liking it. We'll be fine. I think we'll still continue to take really good trades there and maintain a high win record. Daily profit play, I just don't want to be greedy. I got a little greedy today on some of the trades and took a couple losses. But we still have, like, good winners. But when I win, 50 to $100 and I lose $500, I hate it. And so then it takes me another 8, 9, 10 wins to get that back. And it's easy to do, but it's just frustrating when it's like, just like today, I overtrade, followed good mechanics, followed rules, thought it was a pretty safe trade. Didn't matter. Market didn't care, you know? And when I looked at these trades originally, the credit on them was so bad. It's like, I wasn't going to take a trade and, sell a put at 4,900. It's like I could get 10 cents for that trade. So it didn't make any sense to take the trade. It's like I saw the close yesterday at 50.60. I saw the level at 5,100. Once it started looking at 5,000, it's like I positioned for 5,000. Still didn't matter. We closed 18 points lower, and my 10 wide ended up taking a loss. So it is what it is. Not cool, but whatever. I'll go to the gym, get out of my system, and I appreciate y'all being here and just let me vent. So, but it's okay. I'll be fine. So we'll come back and do it tomorrow. We'll tackle it. Daily profit play, see you in the morning. Waterfall income. I mean, honestly, I think our trades are fine. We got trades out to May. I really think that this market, if we're going to see some sign of relief, that the April 17 could be a kind of a relief point for market timing, right? And the reason why is, if this market is quickly pricing in a lot of bad things, it's just faster than most. I mean, how bad does it get? Well, COVID was a 30 to 35% correction in a month. So could that be it? That would be the market reacting a lot like COVID, where it's just dumping, and then cycle changes. I mean, we're not in a quarter. Like that bottom in COVID was like in the middle of the cycle in March, but it's like you essentially went from high to low, all the way down for 30 days, and then it changed course. But like I said, without the Fed in sight, I'd like to think that the market could maybe say, okay, we reached a cycle from March to April, big monthly expirations, repositioning. But if we continue to see deleveraging, if we continue to see uncertainty, it's like I'm just not super optimistic right now, unless price proves otherwise. So I think this 20% level is pretty key. We might, dance around it a little bit. We might just poke those lows and flirt with those lows, but not time to be a hero. Okay. All right. All right, everybody. Let's do it again tomorrow. See you. Bye. Thanks.